Good afternoon, traders. Today is Wednesday, June 21st, first day of summer, and you're looking at my chart, a chart of the S&P E-mini, and it's about 1 p.m. Now, I'm doing this midday because today's price action is a little bit dicey, and let me show you why that is. First of all, you see my trading zone up on the chart, and my trading zone forecasts a range of 43 points, okay? 43 points is my forecast range, where prices are expected to or are forecasted to trade based on how they've traded in the recent past. Now, although the forecast was 43 points, up until 1 o'clock today, prices have only traded within an 18-point range, a very narrow range. And I want to take you back to yesterday, or just after yesterday in the overnight session, and you see prices were coming in just where they closed on Tuesday, right over here, 44.34. The mathematical forecast based on Taylor indicates the chart or the prices should trade. But where are they trading? They're staying pretty close to calculated support down here at 44.10. And one of two things is true on this chart. Now, nobody knows where prices are going to go, because in order to do that, you'd have to be a fortune teller, and I'm certainly not. But nevertheless, I can tell you one of two things is true on this chart. You see over here, this is where the market made a high at 44.22. This is just at the open, 44.22. And here at just afternoon, prices made another high exactly at 44.22, exact same high. So one of two things is true. Either 44.22 is going to be the high of the day, or let's look at the low. The low is down here at 44, where are we? 44.03. So either 44.03 is going to be the intraday low, which is going to be the low of the day, or 44.22 is going to be the high of the day. Both these things can't be true, or it's very unlikely that they're not true. Either the prices are going to exceed this high at 44.22, or they are going to plummet below this low at 44.03. So that's what we can see on the chart. Now, according to just the way the market should trade, the market should trade somewhere in this forecast trading zone. And the market is likely to trade at this gap at the previous day's close. Today, there was a speech by Fed Chairman Powell at 10 a.m. where he said something that had been widely anticipated, which was that interest rates are going to continue to rise based on the Fed estimation of inflation, to control inflation, okay? So let's look at the overnight, and I started to mention this, but at the overnight, you see prices came in, were trading right at where they closed on Tuesday. And at 6:30 in the morning, they began to decline, a slow and gradual decline until just after the open, and then they started to gyrate wildly in a 15-point range, and then they moved up. Actually, about a 15-point range. So why did they decline here? Well, right over here was the Fed chairman's announcement at 10 a.m., okay? I have my cursor at 10 a.m. This was expected. This announcement was not a surprise. It was not a mystery. Now, prior to the announcement, prices were taken down. The market was taken down. Why is that? Well, the market now is continuing its decline back down to calculated support at 44.10. So will it break this low at 44.03? Or is this the beginning of the market being taken back up to the close of Tuesday? We will see as the afternoon progresses. So that's the analysis for today. I'm Marv Eisen of Timeless Dollar Trading Academy. Trade safely, use lots of patience. It's a tough day to trade today, my friends, because of all the chop that you see. Basically a scalper's market, but then again, scalping a market like this, you're more apt to lose money than you are to make money. And certainly if you scalp in and out, the commissions will eat up all your profits. So let's see what happens. My inclination is that the market is going to trade more up here, and I don't think it's going to test the slowdown at 44.03. But again, I'm not a fortune teller. Thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video.